Thank you, Anil, and thank you everyone for being here. Here to talk about NeXGold Mining Corporation, which we believe has one of two probably assets in Canada that is shovel ready to go, and I'll talk to you about that here. Cautionary statements you can read on our website at your leisure, but NeXGold was formed through M&A activity in 2024. We came out of the gate at this conference last year with two development assets, and we said we are going to advance both those projects to the point where one of them moves ahead of the other, and then we will develop that one first. We'll never develop two projects at the same time. So we have the Goliath project in Ontario and the Goldboro project in Nova Scotia. Those are two main projects. Goldboro moved ahead in 2025. It already had a First Nations agreement, and it got all of the major permits required, both federally and provincially, so it's ready to go, and we'll look to move that into construction later this year. We have the financing in place, so we did a royalty financing with Appian, and that came with an LOI for project financing of up to $175 million. We need to update our feasibility study, but that, along with equipment financing, and we did a major equity raise last year, we think gives us the capital to build the project, to take Goldboro through construction into operations, and then provides the cash flows to build Goliath after that. So we think there's a significant re-rate potential on that updated feasibility study, which will come out in the second half of this year, and on that construction decision. We have a management team that has been there and done that before. We've built mines, we've explored, we've discovered deposits, we've permitted, we've financed, we've operated, we've built. We have a strong board of directors led by Jim Gowans, our chair, and then we also have Frank Justra and the Fiore Group, as well as Sean Kuhn as strategic advisors, providing advice to the company on our strategy going forward. But 245 million shares outstanding, just over $500 million market cap as of today, more than $100 million of cash in the bank, and then you'll see we've got about 105 million warrants. Those are all in the money, and if those come in, that'll be another $175 million of cash. So we think we're funded, and we don't foresee the need to do any further equity raises for the company to take us to build both Goldboro and Goliath. We're a very liquid, 1.7 million shares a day traded, more than 60% institutional. The financing we did was probably 99% institutionally placed, and we do have three analysts covering us with target prices in the $4 plus range. Just a quick overview of the two projects. Both of them have either a feasibility or pre-feasibility study done. Very solid economics, but if you look at the gold price, $1,750 for Goliath in 2023 and $1,600 for Goldboro. So we're going to update those studies. Current costs are going to go up on those, but we'll definitely see a lift in terms of the gold price that we're going to use. So I'll talk about Goldboro first. So this is a project, 285 square kilometer land package in northeastern Nova Scotia. It's about a 3-hour drive from Halifax, 2 hours of which is on a multi-lane highway, and then the last hour is on a 2-lane paved highway. Power, 1.5 kilometers from site. It had its environmental approval in 2022. 2025 was a pivotal year for the project. We got our Crown Land Lease and License in May. We got our Schedule 2 amendment in July. And then the big permit we got was the industrial approval in August, and that's the last provincial permit required to be in construction. No one thought we'd be able to get that. The history of Nova Scotia was not kind to gold miners, but with the change in government, we saw a major impetus for the government to move projects forward, and we benefited from that greatly and got that industrial approval, and then got our Fisheries Act authorization in October to give us all the major federal permits required. We also have a First Nations agreement with the Mi'kmaq of Nova Scotia, the first of its kind. So this all permits, First Nations agreements, shovel-ready, financing in place, and we will continue, as we are building the project, we'll continue to look for more gold on the property package. We think it's a very prospective land package. These are the economics from 2022. It shows, again, at $1,600 gold, a $325 million IRR. The CapEx was $271 million. We think that's going to be $400 or more, and the reason why is that CapEx assumed a contractor-operated fleet, so the operating cost is higher, but your capital costs are lower. With now having multiple assets, we think we'll be able to get better pricing on the equipment, and more importantly, we'll be able to finance all that equipment. So It's about a $50 million equipment kit, but we'll be able to finance that with either Caterpillar, Komatsu, whoever it is we decide to go on. So top quartile performance in terms of our all-in sustaining costs, very high recoveries. It's a lot of free gold coming out of the project. Exploration potential, this is a map that shows the western edge of the west pit. The grades that we're seeing in the drilling to the west, very similar to what we're seeing within the open pits. Some high grade, narrow intercepts, and then wider intercepts within there. So there's the opportunity to either extend the west pit further or make a third pit down the line. And the structure, the geological structure, I'm an accountant, so I won't get too much into the geologist, but it's a series of banded anticlinal stacked argillites. There's 87 of them that we've identified. They're about 3 meters deep each, and within the open, we can go below the open pits to mine underground, and that's an opportunity we'll look at in probably year 5 or year 6 of the mine. And by doing that with the same throughput, we can increase the production from 100,000 ounces a year to 150,000 ounces a year. And then if we look to expand the throughput through a permit amendment, we could see this asset going from 100,000 up to 200,000 ounces a year, and extending the mine life to 20 years and plus. A lot of gold developers here, if they're lucky enough to be able to raise the money, to be able to build it on time, on budget, the next question people ask once it's built is what's next? Well, we already have that what's next in the Goliath project in northwestern Ontario. It's smack dab in the middle of a gold belt. It's got 3 million ounces in total on the property, and the key advantage of Goliath is its access to infrastructure. It's right on the Trans-Canada Highway. There's a power line running right through the middle of it. There's a provincial highway that runs between Dryden and Sioux Lookout that crosses the property package, and there's a natural gas line. So road, rail, power, natural gas, all to site here. It had a $335 million NAV using a $1,750 gold price. The benefit of moving forward with Goldboro now is that we can take the time to look at Goliath and optimize that so that when Goldboro is completed, we can move that construction team over from Goldboro to Goliath and have the best project possible that we can. So we're doing some internal studies right now to look at potential changes to the infrastructure, where the mill, where the tailings are going to be located, and we'll then move forward with what the project description is in consultation with our First Nations partners, and move that forward to the government to get that permitted and be ready to go once Goldboro is completed. We're about a $500 million market cap today, but based on using just a $3,000 gold price, we're about 0.2 times NAV. A fully permitted asset in Canada that has a First Nations agreement in place should probably trade anywhere between 0.4 and 0.7 times. So we think that as we go through this year, there's a significant opportunity for investors to be able to see share price appreciation as we complete the feasibility study, have that final investment decision from the board, and then start building that project. So to sum up, and I'm trying to get us back on track here, $500 million market cap gives us the strength and scale to be able to build a project. We're a team that has built projects before successfully in Canada and around the world. We've got very rare assets within our portfolio. Fully permitted projects in Canada are very rare and are very attractive opportunities for mid-tiers and seniors, as well as for investors looking for that next gold producer. We have the financial capability to take us through construction and into operations with the cash we have from the equity raise, potential warrants coming in, as well as the project finance facility with Appian. And we think we've got, this is just scratching the surface here with NeXGold.